Welcome to The Explainer. I am absolutely thrilled you're joining us today because, well, we are dissecting an event that has literally rewritten the global financial rulebook. The 2026 Bitcoin conference in Las Vegas? Yeah, it wasn't just another tech meetup or an industry echo chamber. It was, without a doubt, a historic turning point in United States policy. We are looking at a fundamental, ground-up shift in how the most powerful government on Earth interacts with the world's leading digital asset.
Okay, let's dive right into this. If you've been following this space for a while, you know the history. For years, the official stance was, to put it mildly, deep skepticism. We're talking constant market suppression, aggressive rhetoric, and just relentless regulatory crackdowns. But what emerged in 2026? It represents a shocking 180-degree pivot. The new policy is entirely defined by a strategic embrace and massive accumulation. The government is no longer trying to crush the market. They are actively jumping in and participating in it.
To understand exactly how we got here, we're breaking today's explainer down into 5 parts. First, a historic paradigm shift. Then, the strategic Bitcoin reserve, followed by the concept of code is free speech, full system integration, and finally, the ultimate Bitcoin paradox.
All right, Section 1, a historic paradigm shift from outside the system to inside the system.
You know, the true shockwaves coming out of Las Vegas had absolutely nothing to do with a new software update or some network upgrade. The real shock? It was who was actually physically sitting in the room. This wasn't just a handful of niche politicians out looking for votes. We saw high-ranking White House advisors, officials from the FBI, key figures from the Department of Justice, and a massive array of congressional representatives all in attendance. Seeing this unified, heavy-hitting government presence in one place sends a very clear, very loud message. This is a coordinated institutional pivot. The people who write the laws and enforce the rules, they were front and center.
And that leads us to this inevitable conclusion. Bitcoin is officially no longer an outsider asset. For well over a decade, its entire identity was wrapped up in fighting the establishment, right? But as of 2026, the system has made a highly calculated decision. If you can't beat it, you absorb it. Bitcoin has fully entered the establishment.
Moving on to Section 2, Strategic Bitcoin Reserve, the U.S. Accumulation Strategy.
Let's see how this builds into real-world action, because this brings us to the most tangible proof of this absorption, the creation of a U.S. Strategic Bitcoin Reserve. This policy pillar changes the global economic landscape forever. The White House has actually laid out a very clear 3-step accumulation strategy. Step 1. Retain the Bitcoin the government already holds, which is largely from seized assets from past law enforcement operations. Step 2. An absolute, complete halt on all government sell-offs, so they are no longer auctioning off those seized coins to the highest bidder. And Step 3. Formally utilizing these holdings to establish a national reserve asset. They're literally locking it away in the national vault.
And the scale of this ambition? 1 million. Just take a second to let that number really sink in. High-ranking officials have strongly hinted that the ultimate goal for the Strategic Reserve is to accumulate and hold 1 million Bitcoin. That is nearly 5% of the total supply that will ever exist, permanently removed from the open market by the United States government.
So, the absolutely crucial point here is that by accumulating this much of the asset, the government is officially categorizing Bitcoin as digital gold. It's not viewed as a speculative tech stock anymore, and it's certainly not seen as a dangerous fringe currency. In the eyes of the state, it is now a modern, undeniably scarce reserve asset held for long-term strategic and economic security. It's basically sitting right alongside physical gold bars in the Treasury.
All right, Section 3, Code is free speech, the regulatory pivot.
While the financial implications we just talked about are massive, this next part might actually be the most profound change of all. We're looking at a complete rewrite of U.S. legal and regulatory philosophy. Look at the past. Regulatory agencies frequently targeted software developers and coders directly. They treated the creators of the tools as legally liable for how those tools were eventually used by other people. But the 2026 enforcement model draws a hard line in the sand. Going forward, the focus is exclusively on isolating bad actors. They're targeting only actual criminal behavior, scams, and fraud, while leaving the builders entirely alone to innovate.
And this brilliantly illustrates that shift. Quote, code is free speech. This wasn't just some rallying cry from a bunch of developers. This was explicitly stated by the U.S. Department of Justice and served as a core theme of the 2026 conference. To hear the DOJ publicly align with this principle, that is a monumental, hard-fought victory for the developer community.
What this essentially boils down to is that the U.S. officially recognizes writing code, particularly blockchain development, as a legally protected form of expression. It views the act of programming through the protective lens of the First Amendment. If you're writing software, you are expressing yourself. You're no longer treated as an inherent financial risk just for deploying code.
Which brings us to Section 4, Full System Integration, the government and Wall Street embrace.
This new legal clarity paves the way for our next major shift, because with the regulatory storm clouds clearing out, traditional finance and politics are sprinting to actively merge with the crypto industry. We're seeing a brand new partnership playbook unfold at the highest levels. We saw top political figures, including Donald Trump, personally attending and speaking directly to the industry. The stated bipartisan goal across the board is now to make the United States the undisputed global crypto hub. The era of hostility is simply over. The government is actively partnering with the industry to make sure the capital, the talent, and the innovation all stay right here within U.S. borders.
Now, what's really interesting about this breakdown is that traditional finance and crypto are no longer running on parallel tracks. They have fully fused into a single Wall Street ecosystem. We are seeing massive capital inflows divided between easily accessible Bitcoin ETFs, heavy-hitting institutional funds, and now explicit government backing and reserve accumulation. Bitcoin is well and truly a foundational pillar of modern Wall Street.
And finally, Section 5, the ultimate Bitcoin paradox.
As we process this incredible institutional victory, it really forces us to think critically about the philosophical cost of all this success. Think about it. The original Bitcoin, born out of the cypherpunk movement, was explicitly designed to be a peer-to-peer system that existed completely outside of and highly resistant to state control and traditional banking. Yet, the 2026 reality of Bitcoin is that it's now a massive state asset. It's hoarded in government reserves, legitimized by regulators, and heavily traded in the ultra-traditional halls of Wall Street.
So I'll leave you with this. When an asset is totally embraced by the very system it was originally built to bypass, is it still the same asset? Has the system actually changed Bitcoin, or has Bitcoin changed the system? It is a fascinating paradox, and it's one that is undoubtedly going to define the next decade of digital finance.
But while we ponder the philosophy of it all, the market itself continues to rapidly move. This U.S. policy pivot is creating absolutely massive tailwinds for adjacent sectors. We are talking explosive growth opportunities across ETFs, industrial-scale mining, and AI compute infrastructure. But as these huge market sectors reap the rewards of this newfound legitimacy, we're left with one final question to think about. If the ultimate rebel currency is now the ultimate establishment asset, what does that actually mean for the future of money? Let us know in the comments if you want us to cover those huge sector opportunities next. Thanks so much for learning with us today, and we'll see you on the next Explainer.